Oh, I'm sorry. Where does the correction end? Right? We are correcting. We got rejected from yesterday's high to rejections at 470 for SPY. Looks like we're headed lower, right? So we want to figure out, okay, what economic news do we get today? What is significant? Where does the correction actually end? Let's go ahead and jump, right? Okay, so we got that rejection earlier last week. We keep stepping lower, right? Lower low, lower low, lower low, lower high, lower high. Well, about the same high, but it's stepping lower. We are due for a correction higher. Okay, we are due to bounce, but I think this can go a lot, not a lot lower. I think we can come down to that 200 moving average, that 200 daily moving average. So let's keep our eye on that. You can see the candle is on the daily chart. Just it's pretty sharp selling pressure. This is what I want to focus on right here. What is this? This is CPI. We got CPI Thursday, and I think the market is headed for the bottom level into CPI. I don't know if we bounce before, during, after, but I think we're headed into CPI at that level. So let's keep a track of that. Now, again, jump over to YouTube if you want to see the charts, because we're going to go over some of the data we got in today. That's not going to show up for you on TikTok, or yeah, it should show up for Instagram. It streams the channel. So first and foremost, what do we get this morning? We got private payrolls. There is no recession, obviously, right? Look at private. We're not seeing a drop in employment, and we talked about this yesterday. Which is that employment was increasing in the manufacturing sector. Okay, we're starting to see that increase. Where is it? Let's go back. Here it is right here. This is the third line. Look at the third line there, the third vertical chart, and that is from red to blue, an increase in labor supply. All right, so no recession. Where's the recession? Not seeing it. We're just not seeing the recession, right? Private payroll is good. Now let's go to unemployment. Okay, unemployment. This is the weekly. Well, this is basically the leading indicator to unemployment. Jobless claims 4-week average. Nothing there. It's rolling over. No recession in sight. Now, of course, we should get weakening on the next print, because this is a reflection of what? This is a reflection of December. Now, those seasonal jobs are pretty much over. So we should be weakening, but keep in mind, GDP has been revised up from the Atlanta Fed GDP Nowcast. All right. Now, back to it. This is the main chart I want to focus on, CPI. Is this what's going to happen? I don't know. It's just a model, right? This is just a model. Maybe we flow here. I'll show it over here. We flow into, we keep moving lower. We have some upticks. We flow into that CPI print, into that data, and we decide to bounce. Now, I think we bounce either way, because right now the market is just over positioned. There's a lot more people positioned long. So I do think we bounce there either way. But the question is, do we consolidate and go lower, or do we bounce right back up? Now, this is the history that you got to keep in mind. Okay, let's look at this chart. Let me pull this up actually for the TikTokers, because I think this is a very important chart to keep your eye on. Here, I'll pull it up for you guys to see it. Here we go. All right, because I want us to look at this. Now, what this is the significant market rallies after CPI came out lower than expected, right? So significant market drop started in the left-hand corner. This is S&P 500 versus the CPI data prints. And you can clearly see with the arrows, we're at 4.1% back in June. That came down significantly from 4.9%. That was the previous print. Well, that significant drop in CPI led to a market rally. We broke out of that level. It was like 4,200, right? Big level. And we ran up. The next print, 3%. Oh, wow, 3%. Okay, that was good. We pulled back, 3% print, market rallied again. And this is when we had the summer highs, right? July, we went into July basically pretty high. Now, the next print was higher. So we sold off based off inflation. This is probably still an inflation game, because it all depends on the Fed. And if the Fed sees lower inflation, right, making progress consistently, you're going to get close. You're going to pull those rate cuts closer in without recession. Okay, a lot of people cheering for that recession. I don't see it coming as long as inflation continues to fall, because the Fed doesn't have to do anything. Now, move it up to November. Okay, I know it's hard to see November, but move it up to the next market rally, which we just had the Santa Claus rally. The Santa Claus rally bottomed going into November, and ooh, what do you know? We got a print from 3.7 to 3.2. So that after that 3.2 print, the market rallied sharply. Okay, to where we are now. It rallied pretty sharply. So my anticipation is, hey, if we get under 3% inflation, which was the lowest print of the year, 3% was back in July. If we get below that, 2.9 headline inflation, I think we see another rally. I think we're headed for the 200 daily moving average, and we get that rally. Okay, here, let me move it a little bit. And we get that rally into into earnings, right? Into earnings. Let's go back to that previous picture. Well, you guys can't see it there, but into earnings. Now, let's move over to the fundamentals. Let's move over to earnings because it looks like we're going to keep declining here. We could move sideways. Let's move over to earnings. All right. And again, you know what? Let me just move this on for TikTok. Here we go. Let's just look at it this way. All right. So we have earnings. You look at Q4 2023, that is the decline that we should be seeing. Okay, that's the decline in earnings. And I think the market is more so pricing in two important things. Inflation, is it going to be worse or better? And we know this should be the bottom of earnings for the quarter. I'm sorry, for the year, right? So this is the drawdown in earnings. Is this profit margins? No, this is just straight EPS, bottom up. The estimates are lower for Q4. So once we get to earnings, I think that's it. I think we turn up again. Everything else is set in place. Okay, inflation is trending lower. So first we got to get past inflation. That is November 11th. I'm sorry, I keep saying that. January 11th. So we got about, a week from today. So maybe we consolidate into that inflation print, and then we bounce, and then we head into earnings season. Okay, now the positive thing here is net profit margins are set to increase into 2024. So sure, next quarter is, well, not next quarter, but the report should be lower, okay, going into earnings season, which starts late January. Yes, it's lower, but full year profit margins are set to increase. And that's why I think this is going to get bought up. This dip will be bought up eventually. Okay, let's get back to the charts. Let's get back over to these charts. And we do know economic activity is starting to recover. Jobless claims are low. The economy is pretty fine. The Fed is set to cut. They were a little hawkish yesterday. Okay, it wasn't that hawkish. I did fail to mention I made a mistake. The Fed actually spoke about, for the first time, they spoke about actually, reducing the balance sheet runoff. That is pure money supply. So they're going to stop draining. They're talking about, no more draining the system, right? How do I say that? It's like a double negative. They're talking about stopping the drain in money supply. That's huge. Not only are we talking about rate cuts, okay, in March, but also at some point, stop, no longer draining the money supply. That's huge. That's pretty big for markets. Okay. Pretty levels. We got a couple, let me see, thoughts on ADP jobs data that came in today. Jervine, no recession. Pretty simple, no recession. Let's go. Let me see. I know I missed some comments there. If you want me to see your comment, jump over to YouTube. We're going to hit these technicals, talk a little more through what we might see. What do you expect earnings? What up, Demiush? What do you expect earnings to do in 2024? Market thinks plus 10%. Yeah, I think earnings are positive. That's a really good question here, Demiush. Why are earnings positive? Well, it's simple. Costs are falling, right? Input costs are falling. Oil's down. Profit margins are increasing because productivity and automation is increasing. So you pay less to create more, right? Baby boomers are still, they're still spending a lot of money. They have $60-something trillion. They're spending it on services. A lot of people's mortgages, yes, rates are up, but most people are locked in at low rates. Number two, a lot of people's mortgages, they went up, right? The inflation, a lot of people that already have houses, they can refi, they can take out equity from their house to pay off credit, whatever they need to do. And they are doing that. We see refis going up a little bit. So there's still a lot of money in the system, and it will continue to be in the system. And, the top 1%, they're still spending tremendously. Then you have the gig economy. So yes, Demiush, I expect earnings to continue to climb from here, especially every time inflation ticks lower. Forward-looking earnings increase. Okay, rates are down. That increases multiple expansion. I actually talked about this, or not talked about this, but let me take a step back. I think I mentioned this earlier on Twitter. Where did we show it at? Yeah. Here it is. Here it is. So here's what I think about employment report. I know you guys are asking about the employment report, but it was, what'd you say, Jervine? But it was a significant jump in ADP. Is that growth against what the Fed wants? Not really, Jervine. The Fed doesn't want jobs to literally go negative. They just want wage growth. Sorry, yeah, wage inflation to settle where it's at and come down a little bit. They want lower wage growth. They don't want jobs to collapse. Remember, their mandate is two things: price controls, right? Stable prices, stable employment. So they're cool with the ADP jobs data coming in the way they did. It looks like jobs data is starting to bottom. We'll get more non-farm payrolls tomorrow. And remember, the gig economy is still strong. So no, I don't think that works against the Fed, but I do think it does push rates up, right? I think it does push rates up, which means bonds down a little bit, not significantly. We go to 10-year. Wow, what do you know? 10-year bounces, the S&P still selling off. Now, we could move all the way up here, right? The 10, I don't know if we go that high. Maybe we come up to 4.7. Okay, I'm sorry. What is this? 4%. Maybe we come in at about 4%, which is why I think the S&P continues to sell off into the inflation report. Maybe it bounces before. Sometimes it'll bid up before because we get a signal from we get a signal, somebody knows something. Oh, inflation is actually better than we thought. So maybe a couple days, I'm going to say Tuesday, depending on what market action looks like. I think we bounce sometime next week going into the inflation report, or maybe on the inflation report if it's really good. I think it's going to be good. Oil is still flat. Growth is still decelerating from last quarter. Housing prices, yeah, they're up, but rents are falling. Okay, rents are falling. Cars, right? Car inflation is falling significantly. That is most of inflation. So I think the report will be good. But rates are moving up slightly. What else is the big headwind? Well, DXY, the dollar. Oh, it got kind of stuck at this level. So, can it go higher? Maybe. We'll see. I think tomorrow's report is going to be positive, but I still think people are going to sell on a big rally of the S&P. If we get a rally, I think they sell it because we want to wait for inflation. That's always been the biggest, when we get a significant print in inflation, the market starts to rally. I think that's what we're setting up for here. So I expect the dollar in rates to, stay sticky stay sticky up here until, and maybe I'm wrong, right? It's just a model. It's not, it's not a guess, my opinion, but rates have been significantly sold off, or bonds have been buying up, bonds have been going up pretty strongly. So I think that might retrace back, and we see that now the Q sold off already to that 200. Maybe the Qs bounce a little early, right? Maybe the Qs do bounce a little early, but that's my outlook here is we might have a good jobs number, and I think rates go up a little bit. I think the dollar goes up a little bit, not too much, and the S&P slowly comes back into that 200 daily moving average. The Qs are already there, right? SPY has a little ways to go. I think we come down, and this will meet somewhere in the middle, right? The average is still pointing up. We're still in an uptrend, so it doesn't mean we have to come all the way down here. But 460 is somewhere I think we could come to going into that inflation print, and we're going to talk. We'll also go into where we might see inflation actually come in. But first, let me hit these comments. Try to keep up with everything. I don't see anything on Instagram. Cool. Yeah, hopefully that actually does. Swing puts, adding Gunny Hartman, adding liquidity. I think you were talking about the balance sheet coming back on. So what they're going to do is they're just going to slow the Fed's balance sheet. This is what I meant by that. Let's take these off. Oh, also, look, we got a bump in liquidity today. So I was worried about this. Liquidity did bump up, right? Reverse repo liquidity came back in. It's not making new highs, but we got that bump in liquidity. So more confidence that economic momentum, what is it? Economic momentum should pick up. Liquidity came back in, not significantly, but it is back up. So this is Fed net liquidity. Let's go ahead and remove this. And this is the reverse repo liquidity, or shadow liquidity, right? The stuff that nobody saw coming into the market. It doesn't have much time to come in. It should be ending in March. And that's when I think the Fed really cuts rates. Why are they saying March? Because this liquidity will run out. It'll go to zero. It's basically set to go to zero. If that's the case, the Fed has to do something to keep liquidity up. No, they don't want to crash. They want employment to stay tight. They just need prices lower. And we already saw the last couple of rallies in the S&P when it changed was because inflation came in significant. 3% was the lowest headline print. So if we get to 2.9, I think the market rally is pretty strong. And we have a core at 4%. If it gets to 3.9, right? So 2.9 headline, 3.9 core, I think the market rallies. That's a new low in inflation. That's what we're looking at here. Does it happen? Who knows? But it looks like that's where we're headed. Okay. Yeah, so just be patient if you're long. If you're short, maybe you can play this. I'd wait for a retracement higher first. But look at that big drop at the end of the day. We got rejected twice. Swing puts. I mean, I don't give that kind of advice. Swing puts. It's just, where are your levels at? Thoughts on Costco? We'll go over individual stocks after the macro fundamental report. We're almost through it. Okay, let's see. What else do we have? I don't think we have any more comments there. All right, yeah. So that's what we're looking at here. S&P making new lows on the day at the end of the day. What does Qs look like? The Qs are right there. So now see the S&Ps, the Qs sold off much faster than S&P, and now you're seeing the S&P start to catch down, right? Not catch up, but catch down, because it has to. It doesn't need to, but it's aiming for that average, for that low. So this is a lot of selling. We should bounce at some point. But if we look at the MACD, okay, so these are momentum indicators. They're lagging, but it does tell you momentum is to the downside. The RSI tells you we're pointing lower. I would hope the best time for the turn, somewhere around that inflation print is down here at the RSI bottom, okay? And when the MACD bounces, maybe you want to go to the weekly MACD. The weekly MACD is still pointing up down here, but it should come into the orange line and maybe bounce off that. I think we're in an uptrend. I don't think the weekly goes all the way back to the lows. I think it might come halfway. It might bounce on the other indicator here. So we are due for a pullback. Why? We talked about this before. So let's refresh that, and we're going to go ahead and look at those signals. And what is the signals? Well, positioning. Active fund managers were fully invested. They're probably unraveling. We'll get the next data at the end of the week. Positioning is peak bullishment. The peak bullish sentiment is rolling over, and now everybody's starting to turn bearish. That's, the market is swinging, and now put buying is picking back up. Okay, let's show it on this chart. Let's go ahead and show the put buying here. You can easily check that out here. And this is just market psychology. It's just the ebb and flows of the market. Whereas put buying, here it is, put to call ratio. I got to turn this into a line, and you can see it's bouncing. So puts are coming back up. Usually when puts peak, that is the bottom of the market. So we got a ways to come up. And I think that ways to come up is going to be aligned with S&P coming down. Who knows the exact level? Nobody knows. But I think that's with the S&P coming down into this inflation report. Okay. Gap up tomorrow. Yeah, that's possible. I think we might get a gap up tomorrow. What up, Kiki? Appreciate it. Thanks for the support. Appreciate you guys with the support. Just hoping to answer your questions, give you some guidance on what we're looking at. Nobody's making any perfect calls. I think it's really possible we come into this 200 daily moving average. Maybe we slip below it. That's only if the inflation report is pretty bad. We're coming up on a week now. We are due for a bounce at some point. So if we go to that 30-minute chart, I think we're due for a bounce here. I think we're going to bounce. And then the question is, can we get above the next level? So now we're forming another low here, right? We're forming another level right here. Let's turn this into resistance. We're forming another level there. So we'll see in the morning. Can we bounce above that? Do we get back to 470? Can we get above that? I don't know. Maybe, right? What are the other catalysts? Who knows? Now, like I said, the market is here's an important part too. Let's go ahead and look at Apple. This is a better way of looking at this, because this is another trend that we can track. Another trend we can track with earnings season. After inflation, I think we do bounce, because I think it's going to be good. But maybe we just consolidate. Maybe we rip higher. That's going to all depend on earnings season, profit margins, the other driver. Oh, not crypto. We're not looking at crypto yet, of technology. So what I've noticed is typically the market does reverse around Apple earnings. Where's Apple at? Come on, am I blind? Here it is. It does reverse around Apple earnings. Okay. So here's Apple earnings, right? If we look at the market, I can overlay this with S&P. You can do it if you want. But going back to last year, okay, once Apple reports, Apple's about halfway through earnings season. Once Apple reports, the market typically, well, 3 out of 4 times the market reversed. Okay, so it was rolling down. We had earnings. This was a little early. The market reversed and then it went higher. This time it just kept going in the same direction. But this all had to do with inflation too. There's a lot of different drivers. Now, this is where the market got a little overheated. Apple had earnings. Okay, and let's throw on S&P so you can see what I'm talking about. SPX. Okay. Apple had earnings right here. S&P reversed. Okay, it reversed. Apple had earnings. S&P reversed. So what am I saying here? 3 out of 4 times in 2023, when Apple reported halfway through earnings, the market started to reverse. Does that mean it's going to happen? No, it doesn't. It just is. It's just more context to to calculate into what we're seeing. So if we get good inflation and then the profit margins or earnings are pretty good and guidance is good, I think we do bounce. So this is just a correction. The economy is not falling apart yet. The Fed is due to cut. They're even talking about balance sheet reduction. Stop. No more slowing the balance sheet. That's huge. That's a way to. What's a better way to say that? They've basically been draining liquidity. So if we take a look at that, let's go ahead and put the S&P up here, and I'll show you the drain of liquidity. Wall C. Here it is. So this is the Fed's balance sheet. It's been pointing down for a long time. The only time it bounced up, and we had that big rally too, was Bank Term Funding Program. Okay, this is when we had the banking crisis. The Fed stepped in, right? And we've been using this all year. Fed stepped in here. And basically, even though the Fed's balance sheet's dropping, the Bank Term Funding Program is literally supporting banks. Okay, so what they're saying is, yesterday, we're actually speaking or talking about slowing down this draw in liquidity. So this should go flat. Now, if we go back, here's the turn in liquidity first, but here's what we might expect. This is what we mean by a pause in liquidity. Okay, it's falling. Well, this is a pause, but this is from going up. So we might see this just, maybe in March, April, May, June, who knows? We might see liquidity start to go sideways from the sky. It's been draining and then it goes sideways. What does that mean? That's less downwards pressure. That's more money into the system, not necessarily injecting money, but it's no longer pulling money out of the system. And as long as bonds go up, you're injecting money into the system. So this isn't the best barometer. You could just flip to global liquidity, and we're going to keep our eye on that too. Where's global liquidity? Let's get these off so you're not confused. Boom. Global liquidity has been stepping up for a while. China, Japan, China injected more liquidity yesterday. So you have you have the economic leading indicators, ISM. We saw that yesterday. It's starting to bottom out, starting to pick up. ISM is starting to pick up. Here it is right here. Boom, ISM. Look at that. Supply chain managers are expecting an increase in production. We're seeing employment go up. That matches the jobs number. So I think jobs will be good tomorrow. GDP is set to go higher. Liquidity is picking up. This is picking up, but we're going to be slow for a while. The market is forward looking. It's a discounting mechanism. So the market is saying, well, okay, great. Liquidity's up. ISM is picking up. It's still in negative territory, but it's all about inflation. Hey, let's see if we can get back to this. There we go. But it's all about inflation. When do we see inflation? Next week, Thursday, a week from today. So at some point, I think we do bottom around inflation. Okay. Around inflation, not at inflation, around. It could be sooner. It could be after, but somewhere around here, this is your next big catalyst is the CPI report. So let's go ahead and flip to the CPI report. Make sure we didn't miss anything. I don't think we were missing anything. Let's go ahead and swip to that report. And we haven't got any estimates yet. Okay. We haven't got any estimates on any clear estimates. We got the month over month, but we don't have clarity on here. We're going to go to CPI. Make sure this is next Thursday. I know some of you are day traders, but this is the next big catalyst. So month on month core inflation is expected to come in at 0.3. Okay, 0.3. If it comes in lower, the market rips, and that's for December. So this is the highest spending you're going to see for the next 3 months. Okay, the highest spending. If that comes in lower, that means productivity is picking up. That means all the immigration's working. That means the automation is working by absorbing inflation. The market rips pretty, and it's been ripping before that. I think somebody's leaking the news. Okay, now here's core. Is this core? Oh no, that was core. My bad. That was core. Yeah. This is regular inflation month on month. It's expected to come in at 0.2. So it's expected to bump up a little bit. I like this because if it doesn't, if it stays where it's at or goes lower, huge displacement in expectations. Now the year over year, we don't got that yet. But look, we're expected to come in at 4%. Let me just show the chart. We're expected to come in at 4%, right? Flat. This will be the third month in a row that we're flat on inflation. So if we get 3.9, market rallies. That's my view. 3.9 market rallies on core. Year over year, we might hit 3%, right? 3% was a low. But if we go to 2.9, market rallies. That's what I think. We could still rally either way, depending on how much we sell off. But that's just going to fuel, hey, inflation is still falling. Great. I can't believe people are still out there pushing inflation is here to stay. Inflation is going, well, inflation is always here to stay. Duh. There's no such thing as zero inflation. That doesn't exist. Your wages wouldn't go up. There would be no growth. The average is 2 to 2.5% inflation. Okay. So you don't get rid of inflation. That's not how it works. The question is it going to decelerate back to 2.5%? The Fed thinks so, which is why their SEP, their summary of economic projections, has us at, and I think I have this. Do I have this up here? The summary of economic projections. I think I do have it up here. Here it is. Right. This is on YouTube, so you guys can see it. I don't have it on here, so I'll just push that on the side. But the summary of economic projections tells us, if you look, let's see, it's expecting 3.5% core in 2025, okay? And 2026, 2.9. The problem is people think that the Fed needs to get to 2% to start cutting. That is not true. Powell made it clear they're going to start cutting along the way, right? 25 at a time. They have a lot of cuts to do. So if there is a deep recession, something falls off, there's a black swan, they cut quick, right? That's a negative. But the trajectory we're looking at today is, well, inflation is falling. We can cut along the way, keep things pretty even, right? So things are looking good. At the bottom, the Fed will cut along the way to sustain growth because it is slowing. Growth is slowing. So they're going to try to sustain that growth, right? Takeaway is, the SPY or S&P is just waiting for a pullback. We're just waiting to get in there. And I think that's the next opportunity, not advocating for any positions or anything, just looking at that next opportunity. So here's your here's your support. Watch that 200 daily moving average. That's been pretty good history for us. We got rejected by it after the summer rally 1, 2, 3 times. You could call that 3, 4. Then we finally got above it. So I think it's a good level to look at. 200 daily. It's not going to be perfect. It could bounce before. It could slip beneath it for a while. But inflation is, CPI is the next catalyst to see, do we meet expectations? CPI, are we around the 200 daily moving average, which is also resistance around 460? Do we bounce? That's the question. Okay. Individual, like Apple's getting smacked right now. I think Apple, that's a double top. We're not going to zero, but Apple's getting smacked. They got downgraded again, another downgrade, but this is irrelevant because Apple, we're waiting for that earnings report. This is the biggest earnings report in the market. They have $100 billion of cash on the side. They're going to buy back their own stock. Everybody knows it. They want to see the buyback. How big, how much are they going to buy back stock with all that cash, right? Inflation's falling. They're going to buy back that stock. So I think Apple's key. It's a bellwether for earnings season. Some will do better than others. It's not a promise, but that's what I'm looking forward to. All right. What do you trade? What do I trade? Options. Depends. Options. I'm not doing too much trading, but options. Tesla. I'm waiting on Tesla. You want to see what I'm trading? I am waiting on Tesla at the moment. See, make sure I didn't miss any other macro stuff. Okay. So yeah, I'm looking at Tesla. Tesla has a lot of catalysts here. I think it has the most catalysts, and it's starting to get weak, right? It's starting to become weak. I want to see the RSI get down here on the daily chart. I want to see RSI leak to oversold, right? Doesn't mean I'm buying the oversold, but I want momentum. I want exhaustion to the downside before I even think about getting long. I want some exhaustion. I was looking at it today, but I'm like, no, I don't think so. I think we're heading to that inflation report sometime next week. We might get a pop higher tomorrow. It is at the 200 daily moving average, but if we switch over to the weekly, let's take off this so we don't get confused. You see that Tesla is coming into the weekly, the 200 weekly moving average. Okay, 200 weekly. So that's what I'm looking at. It doesn't mean I'm buying there. It just means I'm watching it to see, did everything align? Is inflation coming in better? Is the overall market starting to bounce? Is there any support on the Qs? And then most key for me, the big key for me is the macro forces, which have led us have led us to actually predict, not with 100% accuracy, but predict this whole cycle, which is, well, are rates peaking out? Okay, let's go to the daily. It's harder to see. Do we see rates peaking out? Rates want to, they're starting to come back up. Do we see rates peaking out? Is that going to align with Tesla's bottom? Okay, and do we see the dollar peaking out? Where's the dollar at? Here it is. Do we see the dollar peaking out? Dollar's hitting resistance. That's why we drew this line, right? This is the last resistance. There's a little bit of resistance here. So if the dollar does roll over around that time, hey, great. But it could move higher. So I don't know. We don't know enough to know yet. But keep your eye on the macro forces. Keep your eye on positioning. I'm going to present the new positioning data when it does come out. It's not out yet. Let me take a drink of water. You're seeing big mounts coming. What up? You see more and more Teslas in my county. California is full of Teslas. Okay, best-selling car, Model Y in 2022, or 2022 and 2023, I believe. Model Y was the best-selling car in the world. Okay, don't believe there's no demand for EVs. There's no demand for other EVs, right? There's no demand for other EVs. Tesla was the best-selling car, and it's only getting cheaper. And they're going to present a car in 2025 they're going to present production for a 25K vehicle, right? To get more market share. That should start in 2025. We still have full self-driving. There's some rumors that Ford is going to license their FSD. They're pretty close, right? Maybe not, but there is some rumors that Ford is going to license their FSD. So I love good news when stocks are declining. Margins are bottoming for Tesla, especially with rates coming down. Margins are bottoming. Tesla's declining. So fundamentals are improving and the competition is falling while Tesla is falling. This is a good setup. This is a great setup. You just got to be patient. It's possible we come all the way down to 230, maybe even 225. Who knows? There could be a negative report. This was the last support, my bad. Let's go ahead and check this out. So right here, this zone right here is probably where we go. Make sure it's aligned with the S&P also. Okay, you want to make sure that's aligned with the S&P, bouncing somewhere around inflation. Yeah, I can look at BABA. Where the fear greed index? Oh, fear and greed index. I'll have to throw that on. I didn't throw it up there. Yeah, we can do BABA. In China is, Chinese stocks are getting ripped so bad. It might be time. I don't like them. I wouldn't invest in them. But, oh shoot, I missed some of you guys' stuff. Here we go. Okay. What up, Bukowski? Check out QS. All right. Let's look at BABA first, then we'll go QS. All right, BABA. Let's clear some of this. I would just I don't think BABA's ready yet, but I'd keep your eye out because it's, this thing's been downtrending for a while. Do we have any bullish momentum? Sort of. I don't like the chart, but it should be picking up in momentum. Actually, let's look at the weekly chart. Let's look at the weekly chart, see if we got anything else here. It doesn't look great. It doesn't look great. Let me pull that MACD down. I know it's kind of confusing. Doesn't look great. I don't like BABA yet. If you're dip buying, sure. But, China is pumping liquidity. I'm just not a big fan of BABA. But this will come into play at some point. Let me throw this on real quick. See where it's at with the tighter moving averages. This is the 921 EMA on the daily chart. You have a cross. Okay, you got a little cross for the first time in a while. So there's some momentum in BABA coming in. There's a little bit of momentum. It might be bottoming here, but it still looks like trash. Maybe you want to see some type of reverse head and shoulders. I don't see it yet. I just don't see it yet, but we'll see. We'll see what happens with BABA. Keep your eye on it. Can you see SPY? Yeah. Let's go QS first. Our next QS. Whoa. What is this? QuantumScape? What the heck? What are the fundamentals? What do we see here on QuantumScape? What is the news? See if I can. Anybody know what the news is on QuantumScape? Obviously had some good news. Let's go to that 30-minute. What did we get here? I don't know. I don't know what it was. What up, Ray? What up, Ray? Whatever. How's everything going? Volkswagen just tested their new battery technology with good results. Okay. Is that what QS is? Is it battery technology? I don't know what it is. I remember this chart from a while back. It exploded, then it got destroyed. So I just have a bad taste in my mouth about it. But yeah, this thing went ballistic. It went up to what, 130, and then it dropped down to $5. Oh my goodness. Could just be a pop higher. I don't know if it lasts, but at this point, you need regulation to pass some of these batteries. There's a lot of requirements for some of these battery technology to pass. And I don't know if it's ready yet, but 2024, there's a lot of government initiatives for energy storage, for battery technology. Biden just passed a more stimulus today, I believe, or this week for chips. So more stimulus is coming in. Won't be a recession anytime soon. We can see SPY. Yeah, we'll look at SPY. SPY, we just talked about SPY. A lot of resistance there. It's falling quickly. Could be a bounce. But look at that RSI. We still have some room to fall on SPY. We still have some room to fall. Let's go to this chart so we can see. Okay, you can see the RSI is kind of double. It's getting stuck there on the weekly chart. It's coming down quick. I want to see SPY come all the way down to 30-ish. 30-ish. I want to see that. I'm not buying SPY, but that's probably going to align with this 200, 460, somewhere around 460-ish. What up, Ray Hayes? Hopefully everything's good. You got any questions? Let me know if you got any questions. It had more volume than Tesla today. Wow. That could be a short squeeze too. It could just be a short squeeze, so be careful. Could be a short squeeze. We'll see if it has a pullback. I don't know. But yeah, this is SPY. If we take this off, you might want to, if we look at SPY a little closer, here's what you got, bro. Here's what you got. I think employment comes out pretty good tomorrow. Could get a pop. So you have all these levels right here. Take this off. You have all these levels. You could get a pop back in a 470, 470.50, 471, and then rejection back lower. So it had this consolidation. It got below it. We'll see in pre-market if it can get above. If SPY cannot, let me see. I think it gaps up. My guess is it gaps up tomorrow, and then it comes down and fills the gap. After, what is it, Friday? I think it fills the gap. There's still not a whole lot of fear, but over positioning right now, right? There's a lot of over positioning, and maybe it does rally up here. But I think people want to see that inflation report because we've ran up so much. They want to reposition to get back in. Nobody wants to miss the rally. Okay. Another reason is I think yields need to come up. Dollar needs to come up. They fell pretty sharply. That fueled the multiple expansion. What up, Yassine? Multiple expansion is just price. If you think about PEs, price goes up. The E, we don't know. That's why I think earnings are important too, because PEs, right? You're looking at price to earnings. Well, you want earnings to come in higher, and that's going to be very positive. That means if earnings come in higher, you have a lot of catalysts because the E can expand and your PE goes down, then price can go. That's too complicated. Let's just say earnings season, inflation, your two biggest catalysts here. All right. What did you say? There was some news today. News on their EV batteries. Okay. On their EV batteries, QuantumScape. Well, good luck. That thing exploded. Just remember, we ran 9 weeks straight, so now we're coming right back down. Yep, makes sense. What up, Dimaj? Appreciate the support. Okay, cool. So, Yassine, what are you looking at? The dollar? You're looking at the dollar, right? So let's go. If you guys, while you guys have pull out your questions, I'm gonna go to the employment report and see for tomorrow and see. Oh, what did we get? S&P. I didn't even see that. S&P Global PMIs. They're hanging in there. Economic momentum is trying to expand. It's trying to expand. We're not there yet, but it is trying to expand. Non-farm payrolls. Okay, we'll look at this. We'll go over this right now. And this will be early morning. This will be early morning. I do think we get a pop tomorrow. I really doubt we sell off hard. All right. So for tomorrow morning, that's EU. I bet you they're inflate. Look at the European inflation. Also, it's on a year over year. Oh, that's PPI. They're negative. Inflation is done. Global inflation is done. Global central banks are turning. Another bullish catalyst. So non-farm payrolls. This is probably the most important report for employment. It does change what is more important depending on the risk, but right now the risk is changing from inflation to growth. Yes, the Fed came out hawkish, but the real risk is now, are we going to decelerate into a recession? So you want to see these non-farm payrolls just remain positive. The expectation is 170. These have been off too. We can't trust none of these numbers. The estimation is so off, right? So I don't know. But the ISM did show us that manufacturing employment picked up. So today we got ADP higher than expected. Maybe we get, these higher than expected. If that's the case, Yassine, watch the dollar, watch rates go up and watch the dollar go up if this is the case. I don't know if it's going to be clear because right now positioning sentiment is kind of ruling the market. We might be too oversold. So we might get a bounce either way. I think we finish lower tomorrow. I think I could be wrong. I think we finish lower. If we pop up and gap up, if we gap up and just start running, I think we're going to sell off because people want to see, investors want to make sure inflation is still trending lower. After the Fed's hawkish FOMC minutes, they weren't that hawkish, but they're still not confirming. Even though I believe they're done, they're still not confirming it. They even say, oh, some members might actually hike. I doubt it. But they're saying that. Okay, now the inflation part, this is where they might get kind of scared. If this moves up, okay, this is average hourly earnings year over year. And what that is this is basically wage inflation. If it ticks up, if it stays at 4%, I don't think that's a bad deal, because it's running higher than inflation. But if it ticks up at all, bad news. Rates go up, dollar goes up, stocks sell off sharply if this goes up. Okay. I think that's what you got to watch out for. Labor participation, I don't think that matters right now. We know it's pretty high. Oh, actually, if it drops, that could be a signal. Unemployment rate, we'll see. What's the estimation? 3.8. This has been off also. Okay, so it's 3.8. It's set to tick up a little bit. I think that it I think it's going to remain low. Why? Because of these are numbers from December. That was seasonal hiring. So I don't think we get unemployment climb until the next report in February, because that's going to reflect January, and a lot of seasonal jobs are no longer available. Therefore, there's people might lose some jobs. I don't think it's that big of a deal because the gig economy is very strong. So I think we're just going to be in flat mode for a while. And we got ISM services. This is going to be, I want to see this. ISM services still positive. That is the service economy. Non-manufacturing, still strong. Okay, still strong. See, what do we look? Employment, service employment. We'll see if that ticks up. I think we're good. Nothing too crazy. Probably the most important report is how far off are the non-farm payrolls? Are they going to exceed expectations? Are they going to be over 200K? If so, the market might get kind of shaky. If you're in line, everything's cool. But right now, we're just selling off pretty sharply. We're selling off sharply. It's tricky. It is tricky. I think you need more evidence for any clear move outside of the technicals. DXY 1026. You said you marked DXY 1026? Okay. News yesterday was negative for DXY, right? ISM, how was it today? Yassine here. Let's switch back to the back to the charts. You're looking at the dollar. All right. So yesterday's news, that was FOMC. The FOMC, which is the minutes, which basically the Fed's expectations going forward. They changed them slightly. The dollar did move up because their tone was a little more hawkish. They talked about rate cuts. The real issue for stocks is different than the dollar. Okay, the dollar is a little different. The dollar needs to see that inflation is coming back up to go up. It needs to see also a very sharp decline in employment or the economy to go up. Anything in between, the dollar just rolls over. That's my view. Are rates carrying the dollar? A little bit. A little bit. So rates might pop also and bring up the dollar. This is not clear. We don't know. We don't have any real clarity outside of inflation. These numbers are all mixed up right now in the macro data. So I just look at the levels. I just look at the levels. That's all you can look at right now. So we need the inflation report, right? And then we need earnings to see what happens with earnings. Other than that, it's very confusing. You said Sydney Archer, average hourly rate will be higher. Why is that? Here's why. I'm going to play devil's advocate. Immigration has helped wages. Why? Because you don't need to pay immigrants very much. That lowers the, you don't have to compete for workers. So I think wage inflation, I don't think it moves. I think it goes lower. I think we get a good report tomorrow. Also, there's a lot of automation. Okay, so that means you don't have the pressure to raise wages to attract workers because you're using AI. Okay, you're using a lot of AI. Everybody's adopting AI. It's a huge secular trend or adoption trend, and it's only going to accelerate from here. Peloton rip. Somebody asked about Peloton. Cole K, we're going higher tomorrow. Okay. Peloton. I don't like Peloton's products. I don't think they survive, but we might get a second wave of fitness, right? Fitness surge. Everybody wants to get fit now. Ozempic, taking all these drugs. Also, biotech, healthcare is starting to outperform. I think it's real estate and healthcare. I think it's just a rotation. We're seeing a rotation into these laggards. And then once we get an inflation report, if it's low enough, boom, we rotate back into mega cap. That's what I think. Or maybe not till earnings, but Peloton kind of climbing a little bit. Let's take this off. We don't need to see that. We don't need to see that. So yeah, it's all about this inflation report. See, this is it right here. If we come in lower to 2.9, anything below 3, everything probably runs higher. That's been the trend of 2023. Meta calls partner. Oh, Peloton partners with Lululemon. Okay. QQQ levels. All right, QQQ. I think the Qs bounce before S&P. We're already at the 200 moving average. We're pretty close. They might bounce. This is all due to Apple, though. Apple, I don't think Microsoft's selling off pretty hard. I think it's just Apple. Let's see what the weekly looks like. That was a big candle. Yeah, my guess is the Qs start to bounce because they've been rotating out. Now you could see RSI continuously fall and then the Qs start to consolidate because it's just buying pressure. It's just buying pressure. But let's see what tomorrow brings. The Qs are mostly big tech, which are going to be less sensitive to a fall in employment because they're using automation. Microsoft, Google, Meta, that's who's carrying the Qs. And they I think a lot of them rip pretty low, but this is Apple. This is basically Apple's market cap pulling down the Qs faster than S&P. That's basically what it is. It's so overweight Apple. I mean S&P are Qs. Maybe we can look at some indies. See, where's Google? Google's still trending higher. Okay. All right, Yassine, what do you say? When is their inflation report? The inflation report is next Thursday. Next Thursday before the market opens. next Thursday before the market opens. What else did you have on here? Okay, yeah, next Thursday. We got some time. There is not something we can say about the dollar going higher or lower. The dollar, I think the dollar goes higher or lower based off extreme misses in the data. Meaning if inflation does tick up meaningfully, I don't see it happening. You need oil to go up. Then the dollar goes up because it's going to be rates up, risk off, period. And the market's up a lot. So people are going to sell their stocks into dollars, sell their assets into dollars. But I don't think that's the best scenario. I think the best scenario, the closest scenario, the more realistic scenario is that we see growth fall off in February. We talked about this before because February's data is going to reflect January, and January is probably going to be a big slowing in payment. I'm sorry, in employment, growth, GDP. So next month is where you might get the weakness. Now, the market is a discount mechanism, and it could be discounting slow growth in February. It could be discounting that. I happen to think that is the truth. That it's a discounting mechanism, and it's already saying, okay, we expect weak growth in February. We saw profit margins for S&P 500; they're due to decline. So maybe the bottom of the market is in February. I don't know. I don't know where the bottom's at. But first, we need to take our eye on inflation. That's the next big data point. And we're almost at 2% around the board. We are at 1.8%. Core PCE 6-month annualized is already at 1.8. It's below Fed's target. That's just one data point, though. You can cherry pick the data. So all it tells you there is that there is progress. But eventually, when the dollar gets below, when the Fed, so right now you're seeing the Fed is talking about reducing the balance sheet runoff. In other words, not taking money out of the system. If they start increasing money in the system again, the dollar should drop pretty sharply. But that's, we got time. We got time for that. We got time to wait for that to happen. I met a few persons talking about this crypto coin name NXRA. Could you give feedback? I don't know what that is. I don't know what NXRA is. Most of them are scams. They might go up a lot. They might dump on you. You guys see Shiba and Dogecoin are still struggling because they have no use case. I don't mess with coins with no use case. There's too many coins out there. Most of them are trash. All right. NVIDIA, that's a good one. I think NVIDIA is going to explode. There's so many chips being bought up right now. So let's take a look at NVIDIA. I was going to say that's not the chart. Okay. NVIDIA just keeps knocking on this resistance from August. Okay. So I think NVIDIA, before after earnings moves up. It is holding the 200 daily moving average at the moment. Yep, it's holding this average. It's knocking on, what is this, 500 basically, about 500. It's knocking on 500. Couldn't get above this level on earnings, sold off, bounced. Let's see if it holds at 200. But NVIDIA should be a nice play if you're looking to swing it. If you're talking about day trading, it doesn't matter. We're not really doing day trading. You'd have to ask, we'll go into the 30-minute chart if you want to see what, something really looks like. What'd you say? When you talk about growth, do you talk about GDP? GDP is backwards looking growth. So anything with GDP is really looking backwards to the previous month or the previous quarter. When I talk about growth, forward looking growth, I'm talking about ISM. And we just got the ISM numbers. It is recovering. It's still in contraction. So we're not out of the woods yet, but it is recovering. And that is the business cycle. Okay, that is the business cycle. That's why I'm very bullish going into 2024. I think we see the slowest period of growth in February, March, April, and then we start to reaccelerate because we have a lot of fiscal or government stimulus, a lot of initiatives for electric vehicles, for not just electric vehicles, but for renewable energies, for chips, for technology, a lot of communication, infrastructure building, infrastructure bill itself to rebuild roads. We're headed into an election year. They're just going to keep stimulating. They're going to try to get, they're going to try to repair the economy. It's just what they do. Oh, Microsoft. Okay. MSFT. Microsoft is setting up for a nice pattern here. Microsoft is setting up for, well, you guys can see it. Let me see. Let me take that off. All right. So Microsoft setting up. Boom, 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 boom. Looks a lot like AMD. And then you get that breakout. So Microsoft setting up. Let's bring this out a little bit. This is a flag. This is a bull flag. Bull flag. I like Microsoft. Microsoft's easy to trade options on too. It doesn't move too quick. It's not going to collapse. You know, a lot of AI in there too. So this is a good option stock for beginners. But it is setting up in the wedge. So, but long-term, Kiki, long-term price in Microsoft, I don't know. I don't know what the long-term price would be. What you can do is use a Fibonacci. Let's see what the Fibonacci tells us. Okay, so if I go 2024 Microsoft, I'm going to say Microsoft into 2024. I think it makes a move to 500. That's a big move, but AI is accelerating. It's not slowing down. It's like 35, 36%. AI is accelerating, and the Fed is near cutting rates, and the Fed balance sheet is going to stop pulling money out of the system. The inflation is falling like a rock, even though people still are told that it's going to come back. It's not. I mean, there's no evidence for that. Yassine, so when we get ISM back above 50, will we see the dollar go up? That's a really good question. If business activity picks up above 50, we start expanding. I don't know if that necessarily has to do with the dollar. I would be more focused on liquidity. If you see liquidity pick up, so this indicator right here, this is Fed net liquidity. Nope. If we see this go up, okay, then this is Fed net liquidity. Yeah, no, it's global liquidity. My bad. It's usually white. Okay, if we see this go up, okay, the dollar is coming down because that just means they're printing more dollars. That's my view, right? If they cut rates, the dollar is going lower because they're making it cheaper to borrow money, and they're making it, the dollar goes up when it's more expensive. Okay, when it's more expensive to borrow debt, the dollar goes up because it makes the dollar more valuable. If they cut rates, then you're getting paid less to park your money, to park dollars. You're getting paid less, dollar goes down, right? It's a big, everything switches. So if they cut rates in March, I'm very bearish on the dollar, by the way. Big move in the dollar would be under, I think, 101. If we see DXY going, where I'll switch to this chart. If we see the dollar drop under 101, you remember last year we talked about this. It got down there, 199. See, 101 is the last support. So if we get under 101, watch for the big collapse. And then maybe we come back down to like 96. I think that's the low that we get to. So, but yeah, it's not, depends what pair you're trading. I know you do futures, so I'm not sure what pair you're trading. The best way to gauge that is if the Fed starts cutting, and then you go find another currency whose bank is actually holding rates, or I don't think they're going to increase rates, but who's holding rates, that currency is going to outpace the dollar. Because if you're cutting rates, the dollar is going to depreciate, and whatever currency is not cutting rates, that currency goes up to some degree. OC, what is this? OCUL? What is this? Right here, therapeutic. Oh, biotech. Ocular Therapeutics, biotech. All right, let's see. Where's it at with the RSI? Oversold. Looks like it's coming back down. It is a biotech, so you want to know the fundamentals. Do they have a new drug? Is there a new item? When is their FDA approvals? Right? Is there any FDA approvals coming up? These are dangerous. You can't trust them. You want to know the fundamentals for sure. And then, can it hold this EMA? I don't think so. It looks like the RSI. I would wait. It looks like the RSI is coming down, and it had a nice run. BART. So I don't know if you're holding the bag, but yeah, biotech. Let's see. Is there any resistance here? I should probably switch charts, but let's do this one. I might have some room. Might have some room. Throw me some more tickers. TLT, I like that one. Mr. Oracle. Oh, what up, D. Mayush? Thank you. I would love to be the Oracle, but as soon as you claim that name, you're going to be viciously wrong. So don't jinx me, D. Mayush. She popping next week. Who? TLT is a good one. Hold on, give me a second. I'll be right back. This is what do we have? An hour. I need to take a small break. Give me like a minute, and then throw your tickers in there, especially on YouTube. Okay, here we go. What up, Nick Fox? What up, Nick Fox? So yeah, Yassine, watch the ISM. I mean, watch the global liquidity, net liquidity. I'd watch that. Julian, what up? What about PayPal? Okay, cool. Appreciate it. All right, so let's go ahead. We'll go full on the tickers. Let me switch to this chart. I'll switch to this chart because this is more the macro chart. Get the big levels. We'll start on the weekly. Start on the weekly chart. Do I ever trade currencies? No, I do not. I only trade my dollars for crypto if I need to. But no, I don't trade currency. Same concept. It's a little different with Forex, a little faster. Supply and demand, support and resistance. I can chart it for you if you want. Okay. So first we have, if you are on, actually, what do we have? TLT. Okay. I like TLT. TLT is finally had a pullback. Okay. Finally had a pullback. You can see the long-term trend is still pretty nice. Okay. This is the weekly chart. So a little bigger trend. The RSI is starting to ease a bit, but MACD or, long-term slow momentum, the momentum's still picking up. So it's trying to get above this 200 weekly moving average. I would still wait. I think everything's kind of in pause mode, not because something's wrong, but because they've had a nice run. They've had a nice run. People are selling their bonds. It went up a lot, right? What did we get? How big was this rally in bonds? Long-term bonds. 20% rally in bonds. Are you kidding me? That doesn't happen. So we've had a big rally in bonds. And remember, bonds are literally inversely correlated to rates, right? Bond rates. So if you look at bond rates, they fell sharply. So you might get rates come up a little bit, maybe up here. I really doubt it. Maybe 4%. Maybe they get rejected at the 200. If that's the case, then yes, TLT may have a little bit more time to consolidate before it moves higher, right? I don't know what it is. Let's go to the daily. And then we'll see on the daily. Let's throw these EMAs on here. I mean, SMAs, 50. Okay, it's below the 50. It's coming into the 100. And then you can see here that the MACD momentum is rolling over. So that's why I'm like, wait, take a rest on TLT. The MACD is rolling over. And it is lagging, but it is rolling over. RSI also confirms that bonds need a rest. Okay. They need a rest. Where's your next support? That's the next question. Where's the next support for bonds? Well, I see a couple. Hey, you might get a big. I can see an inverse head and shoulders here. Here we go. So somewhere around here, we could come back down to 92.50. I don't know if we could fall that far though, unless we get some really bad growth in February. So I don't know, but here's your reverse head and shoulders. This would be ideal. but you got to be patient. There's your shoulder, there's your head. Now let's say we come down here and then you get the breakout. Boom, 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 right? So be patient. Right now the market is trying to consolidate, find a bottom. I think people that are shorting might be shorting is tough, but might be in a better position if we get an upside move and then an upside move. But that day bonds all have to do with inflation and growth. Stocks are way more complicated. Bonds are easy. Is growth going up? Is growth falling? Right? This move has been more so growth is decelerating, so bonds move up because you get fixed income. This is the safe haven for slowing growth. Bonds go up. But even if growth comes out weak or employment comes out weak tomorrow, you know, I don't know if bonds make a big move because it might have priced that in already. We might have already priced in weakness in January, February, number one. And two, positioning is this bonds should still go up a lot higher, but positioning, you know, people collect profits on their bonds, but there's still people piling in because they believe we're going to have a recession. And it's a good trade. If the Fed cuts rates, bonds go higher anyway. So I would look for a support. There is a gap here at 95. It could come down to 95. There's a little gap here. Here we go, 95. Somewhere around here, 94. That's TLT. Soxol. What is that? ETF for... This is an ETF for semiconductors. Now, that thing is getting ripped so hard. But this is like 3x leverage, huh? Watch SMH. This thing moves too much because it's 3 times levered. So I would watch SMH. I wouldn't even watch this. I don't trust these. I don't really trust 3x leveraged support and resistance levels. Watch the ETF, which is the VanEck SMH. I mean, there's different ETFs, but your next support, obviously, on this thing is this gap that got filled, 157, right? There's your next support. Be patient. Be patient. Don't chase anything. It could bounce, but it could fill this gap and roll over again, right? Little gap there, fills that gap and then rolls over. And that's a clear resistance support that may turn into resistance. Soxel. Right? Semiconductors. I think individual names start to actually Bitcoin is dumping. I think individual stocks will outperform a lot of these ETFs. That's my view. Can you check Meta? Yeah. We'll check Meta. What else do we have over there? USD, Chef, and then Yen. Oh, my bad. I didn't see you, Nick Fox. My bad. Here, let me do this. USD. See, what is that? USD Chef. I've never seen that. CHF. Oh, Swiss franc. Okay. USD Swiss franc. USD Swiss franc. Well, is there any liquidity down here? Whoa, that's what, 2015? Let's go to the month. So monthly chart. This is this is a Forex. Okay, there isn't really catalyst here other than central bank, so every 30 days. But I mean, you got some liquidity down here. That might be your support. Now, this is more technicals, but tactically, I want to know the Swiss bank, where are they at with rates? Where are they at with rates? If the Fed is more dovish than this, you know, what is Swiss franc? What country is that? Switzerland, right? If the Fed is more dovish than Switzerland, then this should keep falling. That's why it's falling, because the Fed turned dovish, right? That's why they're falling. It's not, I know people just use technicals, but I mean, this all has to do with the rate of interest, you know, versus the other country's rate of interest. It looks like it's going to fail because there's a head and shoulders also, and the dollar will probably keep weakening. So that looks like it's breaking, right? Head and shoulders, blah, blah, blah. It already broke through. So this is actually a really good setup. I would look for a retracement. If I were to trade Forex, I would look for a retracement. Hold on, let me get this a little tighter. Probably to here. I'd wait for it to come up. And we might get that this week because the dollar and rates are kind of going up a little bit. So maybe a retracement back to 0.8709. See, that's hard to say, but maybe somewhere in here, get a retracement and then it fails back down here. So check that out, Nick Fox, if you're still there. And then USD yen. USD yen. It's probably similar to that. Oh, you know what? This is going to be different. USD yen. What is the, I don't know. What is it? USD yen. Throw the ticker on there for me because I'm not going to try to think what USD yen is. But I will say China stimulating way more than the US. My guess, actually, I do have it up here. My guess is that, where is it? CNY, there it is. My guess is the opposite because China is printing. So the US is moving against China. USD is moving against China because China is printing so strongly right now. They just had a record inflow, 1 trillion of yuan. What does that mean? That they're weakening their currency versus the US, or the US currency strengthening. This might continue. My guess is the same for Japan. I think Japan is also printing money. USD JPY. Yep, look at that. So the more another central bank prints versus the US, the stronger the US dollar becomes. So these things are trending. Let me know if you actually want to see the technicals on that. I don't know if Nick Fox is still there. Let me know if you're still there. So I don't want to just do it for no reason. But yeah, you have a lot of support here. Actually, let's go to the weekly. Keep track of these central banks. Japan might actually change they might be changing their policy pretty soon. So I don't know what that means. I haven't really looked at their policy. I just watched liquidity. But Japan is printing, China is printing. So the trend right now is because Japan and China are printing so strongly versus US has not started printing, their currencies are going to weaken against the US, right? They're going to weaken. So this probably just trends higher. There's your resistance. I bet it breaks until the Fed reverses course and starts cutting rates, which I think is still maybe in March. So maybe you get some weakness in March. Maybe so. Or somewhere around March, before, after March, maybe then. All right. All these stock guys are getting pissed. Stop looking at, stop watching. We don't do Forex, right? There's a lot of Forex people. Bro, what is that? Hold on. I think I missed some people here. Bukowski says, I heard Switzerland has had really low inflation during this whole period. Probably. I don't know. There's a lot of central banks over there in Switzerland, though. Do you follow Bitcoin? Yes. What do you think will happen if the ETF gets approved? Very good question. So I say this about Bitcoin right now. Here's what I think. My opinion. If Bitcoin keeps running up, let's go to that daily chart because it tried to break out of a wedge. If Bitcoin keeps running up into the ETF approval, which should be next week sometime, if it keeps running up, there's a huge chance it sells off, right? I don't think the sell-off takes it very low. Maybe I'm wrong. Bitcoin, crypto is wild, but there's not a whole lot of supply. So if we do break out, then my guess is this is into the ETF. We break back down to that support. But if we just keep doing this and then the ETF gets approved, boom, opposite happens. Market psychology. It doesn't mean it's a fact. That's just how I think it through. So more consolidation, the bigger the breakout. If it breaks out early, it probably fails. There's your answer. Nicholas, man, I cannot pronounce some of you guys. I'll just call you Nick. Another Nick. Oh, Nick. Oh, that is you, Nick. Okay, yeah. See, this is confusing. Nick Fox. I just say Fox because everybody has crazy names, but that's you. All right, cool. Hopefully that helped. If I missed it, you could ask me again. Just ask me again before my brain runs out of juice. Jeremy, for you know it, I don't know if you know this risk on JBP NZD CAD UED. What is this? What are you talking about, Yassine? Oh, these are the tickers. Okay. I'll have to add those on there. If you're doing Forex, just give me if you're doing Forex, just give me the ticker, because I'm not familiar with the tickers with Forex that good, but I don't have them loaded on there. Risk of Joy Chef DXY. Yeah, give me the full ticker. What up? Shout out to you guys. Thank you. Sue, I can't say your name, S Trader, because you get banned on TikTok. Earn my sub. Thank you. Appreciate it. Appreciate it, man. But of all currencies, you know, if Bitcoin is a currency, I don't see it as an actual fundamental currency. Bitcoin is going to rip. Crypto is going to start ripping again pretty strong. And we've been talking about this for a while. All the crypto guys who hate crypto, they disappeared. And the Tesla guys, they disappeared. So ZR, what up, your resonance? Oh, do your own effing research. ZROZ. What is this? Oh my goodness. Zero coupon. PIMCO 25-year coupon US Treasury Index Exchange Traded Fund. What is the advantage, disadvantage here? I've never even seen this. This is a long bond, right? It's just a long-term bond. Just a long-term bond. You got some support here. 83.30. Pretty clear. Long bond. So if anybody's new, bonds are just debt that people buy because the government's going to pay you interest. That's all it is. But usually that debt gets bought up when economy's slow. That's why, as the economy has been slowing, you know, in the fourth quarter, so we had the strongest economy. This is US, by the way, strongest economy in the third quarter that ended in October, right? And you would say, oh, well, why did stocks sell off? Well, that's because of positioning, right? The market is very tricky, but growth is slowing. And so because growth is slowing, all the shorts in US treasuries, the people shorting this, which are long rates, they covered. Boom, gap up, gap up, gap up, because they started to cover. Long traders come in, and then investors have been buying the whole time. So bonds took a big move, but they need a rest. They need to take a breather. Bonds got to take a breather for a while. I'm short Bitcoin at 54, waiting until I get stopped out of it. Okay, cool. Hope you have a tight stop, because boy, Bitcoin is dangerous. Bitcoin is dangerous to trade. But if you know what you're doing, you know what you're doing. I don't trade Bitcoin. I do position trading. I just hold it for a long time. I hold it for the cycle, bottom of the cycle, top of the cycle. That's what I do. I do not day trade Bitcoin. That is a, you know, I can't even say it. I'm not going to say it on here. Can you check out Meta? It's my bad. I thought I did Meta. I guess I didn't. Boy, Meta looks good. What's going on with Meta fundamentally? You want to look at the fundamentals? I think we're just going to run up into earnings. Look, it's here's what I see with Meta. I've been watching Meta for so long. Meta is very likely to just keep doing this, and then earnings, boom, right into the trend. Okay, and then starts going up again. Slow grind higher. But this is a bearish pattern. I think it's going to come, if it breaks this, if it breaks down, it's likely to come back to this longer trend for Meta. If you're looking for a day trade, I mean, that's different. That's going to be a lot different, but we're headed into inflation. And so the best time to really see a level is after the inflation report, the most important catalyst, and then after earnings. That's when trading and positioning really takes place. But now there's so much news, it's volatile. There's so much news. We're going into earnings season. We're going into inflation report. We have the employment report. You got to watch out. You got to be careful. But I think Meta comes down unless they crush earnings. But I think they're already priced in because Q1 should be slow. If that's not good enough, let me know. ZRZ is even more volatile than TLT. I didn't know that. Thanks for letting me know. You learn something new every day. Did you just start trading? No, I've been trading for a while. Still waiting on Meta. What's your reasoning on why we are going lower? Oh, for the S&P, why are we going lower? That's a really good question, King Julian. So end of year SPY 500. I think S&P can go to 5,200 by the end of the year. I think we go to 50. I think we can, and I'll tell you why. This is my specialty here. This is a lot easier than predicting Forex. So first of all, and we talk about this all the time, Why do I think S&P continues to go lower? Because typically it sells off or it moves in one direction until we get the inflation report. That was all of 2023. Right? It would sell off into the inflation report. It's not just that we're selling off, it's that we're over positioned. The bullish sentiment peaked around here, starting to roll over. Put to call ratio it peaked, it's starting to roll over, meaning more people are buying puts now. The call buying has ended right about here. Next is asset managers are over leveraged, so they're not pushing up S&P anymore. They got over leveraged, close to 100% long. Right, this is all positioning and sentiment. So you got, and then also oversold, bro. Bearish divergence. We got some bearish divergence. You can see here clearly that the RSI was peaking right here, but the price kept climbing, no volume, starts to roll over. So bearish divergence. So there's a bunch of reasons why it's selling off. It's not like something bad's happening. It's just when people are overly bullish and it just takes one negative catalyst to sell off. Apple got downgraded twice. They're going to pull down S&P also. So, if you want more, I can give you more. Also, dollars moving up, that's negative. Yields moved up a little bit, that's negative. What do I mean? Dollar moved up, that's going to be opposite. Okay, dollars moving up. And then yields have been also moving up because they're extremely oversold. You can see the RSI starting to pick up. The momentum for rates is going up, which is why I'm bearish on bonds for now. Not super bearish. I think they consolidate, but it looks like rates are going to take a move up a little bit. Okay, especially if employment comes out strong tomorrow. Rates they should continue to move up. They should continue to move up. So I think we come down to that 200 daily moving average. S&P year end, I think we hit 52 to 50, 5,200, maybe more than that. It really depends on how strong profit margins grow from automation, from AI, how much fiscal stimulus. Do we get a promise of tax cuts? I don't know. Maybe, maybe not. Does the Fed cut rates off of lower inflation? If inflation falls faster than expected, S&P goes wild. Qs go wild because nobody expects it. They expect sticky inflation, even though they've been disproven this entire time. So inflation is falling. That's the number one reason people are still off sides. Money market funds hit record high today. So people are still collecting cash on their money market funds, right? And if inflation falls fast enough, there's no reason to be in money market funds because the Fed's going to cut rates. They're going to cut the yield on those money market fund. They're going to cut the yields or the interest on the money that's going into money market funds. Therefore, you depreciate the value of cash again, and they come out and S&P goes higher because capital is going to flow into risk assets. There's my reasoning. What prediction for Oh, I already said that. Sol. Oh, man, Solana's on fire. Solana's on fire. I'm not a big fan of Solana, but Solana is on fire. Let's see. Is it pulling back? Yeah, this thing has a monster trend. Monster trend. Whew. It's up 500%. Solana's up 500% from the lows. I wouldn't even use these moving averages, really. I would have to go here. Sol USD. I'd have to go here because it's a crypto. Cryptos are exponential. There's not a whole lot of supply. And there's really, the market is so small. These things move when they flow out of Bitcoin. So Solana, if it does pull back, it probably comes back to 57. Actually, who knows? Crypto can rip pretty bad. It can rip pretty nasty. So Sol, I would say, comes back to 62, right? We're in a bull market for crypto, so that'd be a nice buy. That's if the Bitcoin ETF fails. If it's not approved, it's coming down a lot. If it is approved, I mean, Sol probably still pulls back a little bit because look at this RSI. This thing has been exploding for the longest time. This can't keep up. You can't keep this up. There's going to be a shift in crypto. There's always a shift. They rotate out of Bitcoin into alts, into Ethereum, rotation, rotation, rotation. SOP, SOP USD, SOP USD. What is that? SOP USD. But I don't see any entry on Sol. I don't see any entry on Sol. So USDT maybe? I don't know what this is, but I'm not even gonna try to guess what this is. Unless you meant Sol. Day trading Meta. Oh, look at nice. Day trading Meta. Okay, let's go to Meta. Did I miss something? Okay, you're day trading Meta. I think Meta is going to break down, but let's go ahead and look at that 30-minute chart for Meta. See what you might get here. I bet it's more likely we actually sell off. So Meta right now, gap fill. There's a big gap here. Here's your resistance. We'll draw this resistance somewhere around here. Might try to fill that gap. Who knows? But thanks for the support. Appreciate you. Okay, so your level for Meta is, look at this wick right here. If you might have a nice blow off top here. If Meta, I also used to day trade a lot, so I can do this a lot easier. If you get above this level and hold, so you want to see, and it all depends on pre-market. Like I said, this market is set to go lower, as in the day trade. I think you sell anything, but you got to watch VWAP. Anyways, if Meta gets here and starts to support, gets above VWAP, boom, it probably comes up into about 350. So you could get a move from 348 to 350. I see those as the big levels. You have all this room to move higher. If it gets below, this is probably the better move. If it does, say it just comes in, it comes out right here, opens, trades up, gets stuck there, watch the Qs. If it gets stuck and the Qs roll over, S&P rolls over, then I would short Meta here. I'd short Meta here until it gets back into this range. I'd probably short Meta. So this is your level 348. It either gets above and holds, or it sticks below. All right. I can't go into super detail because that would take forever. 10-year also bottoming out. Yep, Ace, 10-year bottoming out. So I think we have some more weakness in the S&P. What do you think about Sol USD? I already said it. I don't think there's an entry. I think you need a very sharp pullback. Don't chase it. Crypto will rip you a new one if you chase it. Duration during an election year, though. Yeah, election year. Election years are strong. Tomorrow's an exciting day. Yes, sir. Tomorrow's exciting. You got employment. We'll see how the morning presents itself. If the S&P gaps down, I think it'll probably finish high of day. If it gaps up, I think it finishes low of day. That's just a guess. But my guess is it can't make a meaningful move higher until we get inflation for a swing. If you're just talking day trading, it doesn't matter, right? Like the way you think money piling into stocks when risk-free rate was high. Money piling into stocks when risk-free rate was high. I don't know if I'm understanding that correctly. Oh, there you go. I missed you, Yassine. I'll come back to you. Risk-free rate. Money piling into stocks when risk-free rate was high. If you're talking about the Fed funds rate, money piled into stocks while the Fed hiked rates simply because inflation disappeared, right? The expectation of inflation disappeared. It didn't disappear itself, but the expectation of it going higher disappeared, no longer accelerating. And that's why, there's a lot of cash on the sideline, came back into stocks, but they're also piling into money market funds instead of bonds. So bonds got crushed. I would say that, oh, I see what you're saying. Okay, there you go. I think I know what you're saying now. Long jaw silvers. Sorry, it takes me a moment because there's so many things going through my head. If the Fed cuts rates, money leaves the money market funds and comes into risk, comes back into stocks, goes into crypto, because the trajectory of that cash, right, is no longer giving you the same yield. Now, if you have a lot of cash, who cares? But a lot of people are not piling in $10 million of cash. They're just trying to stay safe. When that safety disappears and it's better to take risk, it leaves. That's my view. It doesn't leave right away, but it will leave. What are 5 leading indicators you look at to give yourself an idea about DXY, how DXY will move? That's a really good question. 5 leading indicators. I would say number 1, watch the levels. Number 2, it's hard to say, Yassine, because right now the risk of the market just changed. So in 2023, the DXY went higher if inflation came out higher than expected. That's fear. The dollar is a risk-off asset, right? so it goes up. If you see geopolitical risk go up, right? Which isn't an indicator, but if there's like some type of war, dollar goes up. Everybody wants to own dollars. That is the world reserve currency, goes up. If rates go up, interest rates go up, what does that mean? You're getting paid more to park your dollars, dollar goes up. I think that correlation is starting to break down because the risk is no longer inflation. The risk is now becoming growth, growth risk. So it hasn't changed yet, Yassine, but the dollar move, I think going forward, I can't tell you now because we could be 3 months in limbo where it does both. It reacts both ways. The dollar goes up or up based on an extreme downside in the economy, so it collapses, which I don't think is going to happen, or inflation comes back because it's a risk off. That's it. If everything stays pretty even, the dollar just trends lower in my view, right? You can look at central banks if you're doing Forex. If China keeps printing, okay, as fast as they are, and that Japan keeps printing as fast as they are, the dollar is going to strengthen versus that. That's your other indicator. But yeah, the dollar is tricky. There's a lot of aspects for the dollar. It's easier to look at stocks for me. I use the dollar to indicate what's happening with stocks more so. Hopefully that answers your question. Maybe not. What happens when risk-free rate is low and they do election shenanigans? What do you mean, Long John Silvers? Oh, now I see your name, Long John. Hey, remember Long John's? I used to eat there, bro. I like fish, but it was just processed food. Stay away from it. It'll kill you over time. Hopefully I don't get banned for saying that. Anyways, Soul Up BT because of the new corporate validator Fire Dancer. Yeah, exactly. Fire Dancer, big deal. Fire Dancer is a big deal. So, but the move already happened, right? So it's like, hey, you got to wait a little bit. You got to wait for a pullback, a nasty pullback, 20%. So are you holding puts overnight? No, I am not. I am not trading anything overnight right now. That's not what I'm doing. There's a lot of stuff you could do, but in order to create content consistently, day trading takes a lot. I'm not going to, that's too much stress. So I'm more so swing trading right now. I'm waiting for the S&P to get to that 200 around there. I'm looking at Tesla. I'm taking bigger trades so I have more time. Check SPY. We did check SPY already. We can go back maybe. If you jump on YouTube, I'll check SPY. Go to YouTube and then I'll check it. Oh, here we go. I'm going to try to catch up on here. Let me see. What tickers or sectors are you following for 2024? Palantir. For investing, Palantir, Tesla. I like Cooler Technology. Now this one is very interesting if you want to hear it. Cooler Technology. Okay, this is a very small micro cap, but it has a huge catalyst. Okay, it's getting destroyed. That's why I'm looking at it. It is getting absolutely destroyed. It's extremely oversold. Okay, and now this is a play for 2025. This is because it is an energy storage battery software services technology, meaning all the batteries that are being built for energy storage for basic, like NASA, they use batteries, right, to go to the moon. Space travel uses batteries. What they do, they have a service to make sure your battery is legit, and they do a lot of other stuff too, but it's getting destroyed because they just did a public offering. It's so small. It's a 25 micro cap, 25 million million cap. It's micro. I never do this, but I've been watching this for a couple of years, and I'm like, dang, this thing is getting crushed. I believe in the story. The total addressable market's about 400 billion. So if they capture 1% over the next 3 years, I think it explodes. Also Tesla, right? Obviously robotics, AI, automation, manufacturing, energy storage, blah, blah, blah. Also, yeah, Enphase, look at Rivian. Pretty soon, I'm waiting for this. Rivian, they're making contracts. They already have contracts with Army, and then Rivian comes in next. Or not Rivian for sure, but there's, it's rumors, so you can't believe it. So I scale in a little bit, but this thing can really move, and it's so oversold. It's been getting crushed forever. I'm like, it's about time to start scaling in. But crypto, bro, if you really want to know what tickers I'm looking at and sectors, I like Caterpillar. I don't do it, but I'm a crypto guy. Crypto, this is a prime prime stage for crypto for me. So I like Chainlink. Number one, Chainlink, Ethereum, Bitcoin, Tesla, Palantir. I like CRISPR. FDA just passed CRISPR approval to gene edit. So CRISPR, but that one's tricky too. Can you check RNDR? It's a crypto. Oh yeah, Render. I'm running out of juice here, just so you guys know. I need to eat some more protein. RNDR. Dang, that thing's up a lot. Is this it? Yeah, that thing's up a lot. I'd be careful there. Look at that. I don't like that. I think it's probably going to get smashed because if this is it, if this is what you're talking, did I get that correct? Yeah. RSI, there's no buying pressure. I think it collapses, to make it correct, quite frank. Nice list. Thanks. Yeah, no problem. That's not investment advice at all. It's just what I'm looking at. Okay. Yeah, look at that, dude. Nah, that's bad. That's not good. There's no buying pressure. The trend is rolling over. It's a crypto, probably going to get the rug pulled under it. 1.6 billion, especially if the ETF is negative. This thing probably drops like 60%. So be careful there. Where do you see Tesla going? All-time highs. I see Tesla at all-time highs in 2024. It really depends. We'll see how these, if margins have bottomed in earnings January 19th, I think, margins bottom, I think Tesla goes to 350 after that. It's really tricky because there's a lot of things changing, but the Fed cuts rates, margins bottom, Tesla's going to be I think it outperforms, Tesla and Amazon outperform all the mega caps. That's my view. Always talk about Tesla. Okay, what else we got here? SPY. Tesla, where do you think Tesla's going? Uber. Oh, Uber's been killing it, huh? I was not a believer of Uber, but Uber has been killing it. I don't like Uber. I think full self-driving is going to take over, but it looks like Uber is doing well. They shifted from years ago. They're making other ways of revenue. I don't know the fundamentals that good, but technically Uber on a technical basis, let's go on this chart. It's pulling into the 200. Maybe go to it's probably, yeah, look at Uber, cool. Wait for the RSI to get down here. Uber had a nice run. I mean, that is huge. Golly, I didn't realize it went up that much. 55%. Pretty big company. It's still on trend, so still trending up. I would wait for Uber. It looks like it's going to roll over. Maybe come into here somewhere. You have some support right about you have support right here. So ideally, when the trend meets the previous support or turns it into previous resistance, ideally that's your sweet spot. Nothing's perfect, but it'll give you a model to look at. What price is this? It's about 50, somewhere around 50. Yeah, that was the RSI, Julian Magro. If it's truly going lower, we have to gap up tomorrow off data. Yeah, King Julian, we probably we could definitely gap up, and then I think we could definitely gap up. It's oversold. It's over. You're probably carrying like calls or puts. Yeah, definitely could gap up. There's just a lot of conflicting data, as in if employment does fall, well, so does inflation for employment, and that's good. That's also bad. So it's like, we'll see what happens. Red Sea conflict can affect oil badly. Yes, that is a risk. But right now, there's just so much supply being pumped for oil. I know I'm late on that. Oil, and then demand. Look at demand is rolling over for oil. Global demand is rolling over. The travel season is over, and you probably won't get more demand till March while supply is increasing. I think Saudis are going to flood the market. I think it's very possible the Saudis do flood the market. I called for a sink to the 60s back here. I was wrong. It went to 90 and then it dropped. Okay, so maybe I'm wrong again. You can always be wrong, but it looks pretty weak. Nobody's reacting. The conflict could turn worse. I don't know if it does. Dollar oil. Okay. Robotaxis still aren't here. Delayed. Scooby-Doo, my arch enemy. The other guy left. Robotaxis still aren't here. Delayed years. Yeah, you're right. But the market does move off of future expectations. So if there's any hint that robotaxis are coming quicker, Tesla moves up, squeezes all the shorts. It is the most shorted stock as far as dollars market value. It is the most shortest stock in the market. That'd be a nasty short squeeze. Grift. Crypto such an obvious gift. Oh, grift. You said grift. Most crypto is a grift. Scooby Dooby just comes in here to make it fun. Thank you, Scooby Dooby, for making it interesting. Why do you think all crypto outfits use word project? Most crypto is trash. We've said that 1,000 times. You know that. Not Bitcoin, not Ethereum, not Chainlink. Those are the only ones that I really like. The graph has some use cases. Tilray is a buy. Tilray, I'm not a believer in cannabis, but could be. Anything juicy in here? 2023, just a toot recovery. You mean all 2024? It already went up after SBD then did them dirty. Tesla is the ultimate vaporware. This guy is bearish. Scooby Dooby, he's bearish on Tesla and Bitcoin. He's been wrong all year, but hey, maybe he'll be right on a pullback. Tesla's the got some NIO. Ooh, be careful with NIO, bro. If you're trading it, cool, but like that company sucks. All of crypto is trash, no real use case. That's easy to debunk. Then why is the biggest asset manager in the world who manages S&P, Qs, every mutual fund, BlackRock, why are they buying the ETF if it's trash? Doesn't align with your thesis. You got to have a better one than that. Tesla's not going to make you rich, dude. Oh, we got 2 Tesla haters. Ooh, okay. 007i Max. It's because I said NIO's trash, so we got pissed. Well, I mean, yeah, probably not now. It's not going to do a 10x the way it did in the past. But people who own crypto, people who own Tesla, they're definitely going to get rich if they already own a lot of it. Yeah, these dudes get hurt. This is how I got banned before because I was so positive on crypto and Bitcoin, and people get pissed off like it's politics or like it's religion. But hey, I guess it is. Yeah, NIO. I'm just not a believer in NIO. NIO is dangerous. 2 cryptos. Okay, I have 2 cryptos. All right, well, I'm out of time. What is it? 2 or I'm 1:45. Appreciate you guys coming on. Don't forget to eat healthy, lift weights, eat clean, stay away from processed foods like Scooby Dooby eats too many Scooby snacks. Stay away from that crap. All right, lift weights, learn something new, teach somebody something new. Stay blessed, and I'll catch you guys next time. Thank you for joining. We'll do some more, but I'm out of breath. All right, thank you guys. Stay blessed.